RealAgriculture.com presents the Beef Market Update with Ann Dunford. Okay, Ann, last week we had the U.S. cattle on feed numbers come out. What did we find from that report?
Well, a little bit of a surprise. It was friendly from a couple of respects. First of all, we were all expecting some pretty large March placements. We'd been talking about that even in our previous video conference. And they didn't come off quite as large as those pre-report guesses were saying. So March placements in the U.S. were actually up 3%. The trade was kind of expecting 6 or 7. So we had a little bit of a positive bump on Monday from that. When the dust all settled, April 1 on feed numbers were down 4%. Kind of in line. We were expecting somewhere around down 4, down 3. So that's the situation. We've still got lots of cattle placed against late summer. All the reports continue to say that. This last report didn't have as many cattle in that heavyweight 8+ category, but still the other categories were all up over previous years. So we're down in on-feed numbers, but the storyline probably still says supply is growing as we head through the summer.
Okay, and so one of the things that's really changed since the last video we did 2 weeks ago is that one of the things we've been talking about over the last couple of videos, the market has come off the highs harshly.
Yeah, and you sit back and you say, you wish you could see these coming. I don't think it was any big surprise that at some point in April highs were going to be in. At some point we come off of that, and it's never pretty. Things always come off faster than what we'd like to see and be able to manage. But prices are off considerably on fat cattle here in Western Canada today. I would call, up for the last several weeks we've traded fat cattle up over 90 cents. Now those prices are back under 90, so we're back into the 80s again, and it seems to happen so fast. But again, here we are at the end of April. The April board comes off, of course, this week. It expires. We go into June. It's had a pretty good spread underneath April for quite some time. Packers are long on inventory, so any big surprise? No. It always happens more than you'd like it to happen, but that's just how it always goes.
So as we look ahead to the summer market, what is in front of us?
Well, again, we've been watching packers build inventory from a cash perspective, from a forward contracted perspective. There were a lot of cattle in Western Canada and in the U.S. placed against those summer months, June, July, August. And that's what we've got lying directly in front of us, once we get May out of the way, of course. But already packers have built inventory through a good part of May and starting to flirt with June already. So unfortunately, we're going to get down here. You're going to see Canadian prices a lot closer to that U.S. floor. We talked about the tight basis we've seen all spring. I suspect now we go back to the floor, and the Canadian dollar has a very big impact on where we trade on a week-to-week basis when we're talking about being right on the export floor. So we're going to track with the U.S. from here on in, and that might be good news because they may not come off as hard and as fast as what we've seen this week.
So as a feeder, there has been a lot of opportunity, I guess, or there has been opportunity to either do some hedging, lock off some small profits or some break-evens in the late summer. With the market harshly moving downwards, and say you're sitting there unhedged, cattle on feed, what are some of the things that you need to be thinking about right now?
Well, yeah, we've talked about that for a while, Sean. These markets have had a good rally in them. They've come off of course, these winter weather markets have allowed the futures markets to trade higher. We've had lots of outside non-commercial money in the futures market, and that's pushed open interest to some record high levels of recent weeks. And so all those things have been telling us that some of these high prices we've seen in the U.S. on the futures market have been, exactly as you say, opportunities. And so now there's lots of signals saying, okay, looks like highs are in. Once the trade determines and totally believes that's in, you're going to see the positions move from longs to shorts, and you're going to see the market come off. So if you're still sitting on the sideline and you haven't done anything and you own the inventory, I guess you maybe should be looking at something. You are at full risk of this market coming off, and that's just everybody's got a different level of where they view their risk at, whether it's a 50% coverage or an 80% or a 20%. But you need to have those kind of plans and programs in place.
The market's really in an interesting position because right now, as Canadian feeders, we're dealing with a par dollar. We're dealing with a U.S. economy that appears to be coming out of a recession. There is numbers to suggest that. But at the same time, on the feeding side, or on the feed side, corn prices and things like that, we don't really have a lot of way to go down, because a lot of the increase in the acres is priced in. So we've really kind of got, it's going to be an interesting summer to see how some of this unfolds.
Yeah, very tight margins. They might be on the wrong side of the margin ledger, but at this point in time, like you say, there's a lot of things that have kind of come into place, and there's maybe not a whole bunch of wiggle room unless you're a believer of the Canadian dollar coming off several points from this par level. So unless something like that, which I sure can't predict, happens, what we see is what we get, and you have to react to that.
Okay, Ann, thank you very much, and we'll talk to you again in 2 weeks.
You're welcome.